I think breadth is maybe more important than depth. Accounting teams might get a lot smaller than what we've been able to, but there might just be more businesses to go around because people are able to get so much done faster. So they don't need to have this enormous, hurdle of raising a bunch of capital to even start your business. I think the small business of the future could be much, much bigger than what we know now. So I think to the extent that accounting is, people say it's the language of the business, you have this shared way to think about how a business is doing. I don't think that's really going away, me included. I think we need to be quite flexible and maintain a level of curiosity on what's happening around us. I think the days of I have my closed checklist and that's the end of my job are probably not going to last.
Welcome to Turpentine Finance, a podcast where we talk with top founders and finance leaders about what it takes to architect success. Our guests speak candidly about big business inflections, market curveballs, and how they approach decision-making so that you have the tactics and mental models for when the pressure is on. I'm your host, Sasha Orloff, founder, CEO, and self-professed finance nerd. You ready? Let's dive in. All right. Welcome to the show. Today is a treat because we get to explore two of the most exciting topics of all time, accounting, obviously, and artificial intelligence. So who better to learn from than Soumya, who right now is the controller of OpenAI. But if OpenAI wasn't impressive enough, Soumya knows a thing or two about scaling because she worked in corporate accounting at this little payments company called Square and the controller of one of the most fastest growing and most valuable fintechs of all time, Rippling. So today promises to be quite an exciting episode. Let's dive in. Welcome to the show today.
Thanks for having me, Sasha.
All right. So you have a bachelor's in math, a master's in accounting, and you're a CPA. Aside from the obvious, what is the thing about accounting that got you excited to make this your career?
My parents are both accountants, so I grew up with a lot of dinner table conversations about accounting. So by the time I got to college and started taking these courses, I feel I just get it. So in some ways, the lazy, undergrad in me was this is kind of intuitive. So I'll just continue on this path. But I think what has kept me, in this profession is it's just this nice mix of, math and systems thinking, abstracting complex rules into mental models that you're able to apply broadly. I think it's just all the different things that I've liked throughout my various parts of my life kind of intersect in this profession. I don't think I sat down one day and said, okay, I'm going to be an accountant.
But it did. And you went to school and then you started your career at EY, and which sort of, set the foundation for your job in accounting. All right. So what are some of your key takeaways that you bring to the job today? Because there's some things that I'm assuming are pretty different when you're in assurance or audit at a firm versus being in-house where you're actually doing the accounting.
Oh, yeah, for sure. I think in terms of the main learnings coming out of public accounting, I'd say one is it really prepares you to be dropped into brand new situations because, you have a new client, you don't have the context, you learn to build context really quickly, learn how to ask the right questions, who to find out. And I think those are really transferable skills, especially coming to startups where nothing's really there when you walk in. So it's kind of similar that way. I also think just the foundation in technical accounting goes a long way. Even to this day, the ability to kind of look up guidance for when you have a new situation, interpret it. Those are, kind of what makes the accountant, tick in a company. And I think EY is a boot camp for all of that.
Nice. Was there any surprises stepping in from in-house?
Okay, you're going to laugh at this, but when I first started at Square, I didn't know how to put a journal entry into Oracle. And it sounds really dumb. How did you get this far and you don't know how to do a journal entry? But at the time, Square was using Oracle R12. And, I don't know if you've ever looked at it, but it's straight out of the 70s or something. I'm sure it's later, but it feels like it anyway. You have to have a very special Excel template and then it has to be formatted just right. It took me 15 times to get my first journal entry. And I was oh my God, nothing in my life prepared me for Oracle. But yeah, that was a surprise.
It reminded me of my first job out of school, and I had to write queries at Citigroup and these risk management queries to predict risk and doing some models. And it would take 8 hours to run a query. And I remember you had to run them at nighttime and then come in the morning and hope that they worked. And it took me like a week to run my first query, like along the way to become a successful one. And so my boss was like, you don't seem like you're being very effective here. And I was like, I'm not, but we kind of have a software problem. So I'm just realizing as I'm teeing up the next question that I'm drinking out of my wife's Square mug. But so you joined Square in 2014, and this is about a year before it went public. And so having never been in a company that has gone public, but knowing as we prepared one of my last companies that a lot of the bottleneck and hard parts are around accounting. So you come in as an accountant doing corporate accounting. Is going public something that like you enjoy the process of going through? What are the parts that you really like? Or is it just one of those things that you get to kind of look back on and you go, okay, I did it. And that was more exciting and more valuable in hindsight than it is actually on a day-to-day?
Honestly, like at that time, this is 2014, like I joined Square because I just loved the mission, the product. I used Square to take payments for my side business. It was just fantastic. And I was like, I just want to be there. I don't care what job I do. I'm just going to go join it. I don't think I was like mature enough or even knew enough about the industry to be like, oh, I need to like go seek out a pre-IPO company. I just like ended up, got really lucky, was there at the right place, right time. Going through the S1 filing was an amazing learning opportunity. I think the filing itself, you learn a lot. But then also all the business process and systems upgrades that comes along with it was just like a fantastic, it was so much fun. I think coming, relatively new out of EY, like all my public audit clients were all public company clients. And so I was really familiar with SOX, and the company was like, very, very deep into SOX implementation at the time. So it ended up being a good fit on both sides. I think it's really fun, and, it's a lot of learning as an accountant. It's like also very, very intense. I'm happy it happened in that season of my life where, I had a lot of energy and nothing else going on.
So one of the things on your LinkedIn that you write is, I led a team of 5 accountants who own the following areas of the GL: consolidations, GL close, capitalized software, accruals, fixed assets, prepaid, facilities expense, leases, deferred rent, cash, tangibles, blah, 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 patent. I reduced 2+ days off staff accountants' effort per month by automating reconciliations and reporting for the areas I own. So clearly automation is something you're proud of. What does this actually mean? How do you actually accomplish something like this?
At the time, like, part of going public is you have to really shorten your close cycle. And I was on this crusade to say, okay, we're going to look at every long pull, every stupid thing that the team has to do and make it go away. What I learned, and partly this is because I was so frustrated with Oracle at the time. I was really bad at it. I didn't really like get the system. I was very much like, when you're onboarding onto a company, the people that are helping you learn essentially say, okay, like, go click here, open this window, download this thing, do this thing in Excel and upload it back. And it's very tactical. And I was really frustrated by that because I just have this like need to know what systems are doing and how they think. And I think I spent a lot of time understanding Oracle and understanding, okay, like clearly reporting sucks. How do we like put a reporting layer on this? How do we now tweak that reporting layer? How do we like build templates for the team? And I think things like a prepaid recon would take 3 days before we made these reporting updates because, you were like clicking 15 times to get one invoice back up. So I think it was a lot of just like really understanding systems, advocating for like, okay, we need to implement something that makes us all much better. In terms of automation, I think I've always like worked in companies that are, that have too much to do and too little people. So automation's not been like, oh, it's like this beautiful fancy thing that I'm going to do. It's like, this is desperation. We need to automate or we're going to like not survive. So that's my perspective on automation.
Is there a time where automation is not a good thing in accounting?
Like I said, my perspective is very biased. Generally, though, when we think about automation, I view it as a very positive thing because you automate the things that are manual, repetitive, prone to error, and then you free up people's time to do work that's more interesting, that is higher leverage, the things that people actually want to spend their time on. Most automation initiatives I've been part of have been like, have ended up in a very happy place and people are like, thank God I don't have to do that like stupid file anymore, is the general reaction.
I mean, I'm aligned. I'm still just trying to look for the counter argument in which this might not be a good thing. We might get to it later, but if only we could figure out how to automate beyond just writing software rules, like maybe with artificial intelligence or something. Anyway, maybe we'll get to that in a little bit. All right. So then you go to another tiny fintech company called Rippling about a year after they launched. What's it like going now to obviously a much earlier stage company?
I mean, I loved every part of it. I went to a startup in between Square and Rippling, and I used to manage like all accounting, payroll, all of that stuff. We used ADP, and ADP was just like this really frustrating beast of a company to work for, especially when you needed something from their support team. And I was on this like hour-long hold on a support call when I got a recruiter email from Rippling, and I said, you know what? Like, I want to quit and go to Rippling and build a much better ADP. Like, this is just total bonkers. But I think joining at the early stage, there's a lot of building to do. The company was on QuickBooks. They had like an external bookkeeper up until that point, which is typical. But we had like a handful of legal entities already, and everything was mingled into one QuickBooks instance. And so I went to the CFO and the CEO at the time, and I said, guys, we need to buy NetSuite. And like, if we don't do this in the next 30 days, honestly, it's not really like, it doesn't make any sense for me to be here because there's not much I can do with like the existing QuickBooks situation. So we did end up buying NetSuite really like relatively fast. I implemented in like a month or so. There wasn't like as much activity at the time. It was easy enough, but like building a lot of foundational systems and process was fun at that early stage. But, Rippling also famously, like people call it a compound startup. It's like 10, 15 businesses in one. So it always kept me on my toes. Like no 2 months were ever the same. It was almost like I now work at 15 different companies and like have to figure out a close process for all of those revenue streams.
When you think about the transition, one of the parts about going public, I'm guessing, is you see all of the potential control deficiencies or accounting deficiencies, and you can't because now you're a public company and you have shareholders and a whole new set of regulators coming in. So almost you could argue that you like might know too much. When you step into an earlier stage company, how do you know what the right balance of financial controls and reporting are when you see all of the places that at some future state you're going to potentially get hammered?
I think you kind of have to completely like put your socks hat away and say, I am a whole different person now coming into a startup. I think at that stage, we were like 100-ish employees. Like you're not going to be implementing SOX. You're just going to waste everyone's time doing that. I think my first few months, it was mostly to like get the P&L to a good place where you could, tell the story of what's really happening in the business. One example is with most SaaS companies, the only thing they put in cost of revenue in the first days is like their AWS or Azure costs. Like they're like, okay, we have like nearly 100% margins. We're fantastic. But then you start slowly loading in like support costs, implementation costs, any other like kind of customer related operations costs. And once you do that, you get a fully loaded view of your margin. And I think that kind of accounting work is actually really useful at that stage because you're not living in this delusional, like everything is great kind of phase. And I have to say that leadership at Rippling was like always really like practical and very receptive to this type of thing. A lot of companies are like, what have you done to the P&L? But it was not like that at all. And I think that kind of work is really useful to the extent that there are like, controls we need to put in place. Rippling is, kind of a payments company, which I didn't put two and two together early. Like in my interview process, it was very much the SaaS piece I was focused on. But then you get in and you're like, well, you're moving money around for payroll. And so actually there's a lot of parallel between my Square experience and Rippling because I'd seen how like at scale you could model a really good like payment subledger of sorts and like run, payments at scale. And all of that was like, oh, great. Like I know what to do because I've seen it before kind of situation at Rippling. So to the extent you put in controls around payments and reduce the risk of, like customer default and stuff, those controls are good controls to put in place. I think we pretty much tabled like any real, SOX type control for like much, much later in the life cycle as a company.
As you step in, you probably have a pretty clear vision of like what a future state would need to be in the world in which you go public. And then there's a current state of reality when you step into a new company. How do you get an assessment of what needs to be done in what order? Like obviously over the next, like say, 5 to 10 years in terms of like accounting controls and practice to get public would be pretty well known. But you have to start somewhere. So how do you do your initial assessment and figure out what to do first? Hey, we'll get back to the conversation in a moment after a word from our sponsors.
Quick math. The less your business spends on operations, on multiple systems, on delivering your product or service, the more margin you have and the more money you keep. But with higher expenses on materials, employees, distribution, and borrowing, everything costs more. So to reduce costs and headaches, smart businesses are graduating to NetSuite by Oracle. NetSuite is the #1 cloud financial system, bringing accounting, financial management, inventory, HR into one platform. That's one source of truth. With NetSuite, you reduce IT costs because NetSuite lives in the cloud with no hardware required, accessed from anywhere. You cut the cost of maintaining multiple systems and improve efficiency by bringing all your major business processes into one platform, slashing manual tasks and errors. Over 37,000 businesses have graduated to NetSuite, so do the math and make the move. Startup founders and execs running scaling businesses know all too well how easily their systems break down and expenses skyrocket. NetSuite is a proven way to cut costs and boost performance. And by popular demand, NetSuite has extended its one-of-a-kind flexible financing program for a few more weeks. Head to netsuite.com/zen. That's netsuite.com/zen. netsuite.com/zen.
There's a world where your CRM is powerful, easily configured, and deeply intuitive. Attio makes that a reality. Attio is a radically new CRM built specifically for the new era of companies. It's flexible, easily configures to your unique data structures, and works for any go-to-market motion from self-serve to sales-led. Attio automatically enriches your contacts, syncs your emails and calendar, lets you create powerful reports, and quickly build Zapier-style automations. The next era of companies deserves more than a one-size-fits-all CRM with an outdated UX. Join 11 Labs, Replicate, Modal, and more. Try Attio instantly at attio.com. That's attio.com.
I think you kind of have to put on an auditor hat a little bit. You know, when you step in, right? This is for any like kind of controllers joining a startup for the first time. I think it pays a lot of dividends to be a very product and business focused accounting professional because one, give the people what they want and why they hired you. So like if that is, you know, quick reporting so they can see how the business is doing, then I tend to always focus the first few months on cleaning up the close process and better reporting. And then you start like doing, you know, risk assessments like an auditor would. So in a lot of companies, revenue is like really critical and like people are very sensitive to that. It depends from business to business, but like you start putting in controls. I call it like, you do controls because controls are good. You want controls. Controls are the thing that, you know, reduce the risk of your operations and help people sleep well at night. The part of SOX that's like, okay, well, I now have this massive checklist and I'm just going to go check. I think that I actually advocate to punt a little bit in the early stages because it's a pretty big distraction. And depending on where the company is, it just isn't like the right choice to make for most people.
If what I'm taking away is some of the things to do coming in is to start to define what are some of the things that are important to the business and sort of giving them some wins. And that might be having confidence in the revenue calculations or gross margin calculations. So you get a sort of like an honest sense of what to do. And then going through and doing some risk assessment. So putting back on your sort of auditor hat. So let's just say you sort of do that. And then it sounds like you didn't have too much organizational resistance. Actually, you probably had some encouragement. Any advice to somebody else stepping into that same situation and they go through and do these things and there isn't the buy-in from the management team? How do you overcome that as a controller stepping into a new early stage startup?
There's kind of maybe two answers to this. One is, I think people come in and expect that, okay, I need a team of 6 people and this is what my ideal team looks like. And then, you know, week 2 in a startup, like you go and pitch this to a founder, like they're just going to like laugh you away. Like it's just not going to happen. And then, you know, it kind of starts this like bad cycle of you feel like they don't think you're important. And then it's like just this, you build a lot of resentment. You think, oh my God, there's no investment in accounting. And it tends to be in a not good place that way. What I've found works is kind of the flip side of that. I like to be really scrappy myself. And, you know, I always think like no matter who you are in a team at like one of these fast growth companies, you're a super IC of sorts. And like you can hire other ICs to help you. But like I think to expect to purely come and be a people manager at these fast scaling companies, it's just like, in my experience, that's not been a good reality to expect. But like, for example, when I implemented NetSuite at Rippling, I was a team of one. Like, there was a CFO and a finance person, but like, that's all you got. Like, what can you do by yourself is, kind of the situation. But then once you start producing some wins for the company, it actually makes buy-in a lot easier, because you don't have to go advocate for it as hard, because now there's a little bit of trust that you've built that you're only going to advocate for things that they know that, you've thought about it and like, this is a real need.
We find this as a pattern of a lot of people who come from bigger companies, public companies, or sort of global multinationals coming into the startup world. And they come in with this preconceived notion of like what needs to be done. And they don't spend enough time building that trust of the business and getting a few wins in that you're there to support sort of the growth of the business rather than controls for control's sake, which are important along the way. And so in a lot of the interviews with CFOs and accountants along the way, I think this seems to be a common theme of the lesson, which is you also have to not just do your job, you have to be a good partner to the business and to the leadership to enable them to do that. And so that is probably sort of a good bridge to thinking about why you've been so successful in your career to date and that balance. So then in March 2023, you join a sleepy company called OpenAI, which is just a couple months after the general release of ChatGPT. And then a couple iterations later, ChatGPT 4.0, according to Bloomberg at least, becomes the first AI model to pass the CPA. So I guess on one hand, I'm like dying to know so many things, but let's start with like, do you use ChatGPT at OpenAI for your accounting process?
Definitely. We actually bias. I think I probably like caused a lot of this in our hiring process, but I bias heavily towards people who are excited about this, because I think, it's the type of thing where people need to be very kind of self-motivated and say, I'm going to like figure this out. And we've had a lot of success, and, we have a really great, like, talented team here. And I've consistently been impressed at how creative people are with their use cases and like how well they're using it. But yeah, it's a lot of fun. And it goes back to what I said earlier about automation. We didn't start using ChatGPT because it was the new flashy thing. We started using ChatGPT because there was no other way for us to close on time. It was kind of the thing we needed to be able to survive that, crazy growth curve.
That's not surprising and amazing, and it leads to so many questions. But let's start with like maybe just to bring it to life. What's like one example in where you might use it in your job?
My most favorite example is a lot of our processes grew linearly with like, the growth of our customers, right? And so in a typical company that's growing fast, but not like super fast, you can generally get by just looking at the long pulls and then saying, okay, well, if I shorten this, then that shortens the whole process. And that's like, okay. But at a company like OpenAI, if you have something that's scaling with the growth of their customers, even if it's not a long pull today, it's going to be just like an impossible pull like 2 months later. So what we did, when I came in, I was like kind of sitting next to people and like seeing how various processes are being done. And one of the things that we did in like our cost accounting was we would download reports off of Azure and, to kind of tag various GPUs into like cost of revenue, R&D, sales and marketing. And in theory, it's like a pretty simple like thing. There's not like complicated accounting behind it, but you have to keep in mind, like once the usage explodes, these are like rows and rows and rows of data. And like the per person doing it at the time was like, I can't open this in Excel at month end because you've exceeded like 1 million rows of activity. So he then would run like a big file and then shard it and then, do it like 9 different CSVs and then stitch it together. It was like gnarly. And also prone to mistakes because like sometimes you would double count, like, you just run like different date ranges and there's some overlap. I saw it, it was like, okay, this needs to go away like immediately. So what we did is we essentially talked to ChatGPT and said, okay, this is what my input file looks like. These are the operations that happen on it. And typically that's like, this is a lookup table that I want you to apply. I want you to then like filter out these things because we don't care about those. And then now pivot it in this format that like summarizes the categorization of what. And what ChatGPT did is it turned those operations that we described in like plain English, by the way, to a Python script, which then, keep in mind, these are accountants that have never written a line of code before. Like we're not hiring like programmers for these jobs. These are like straight out of Big Four, like CPA background folks. And you essentially realize, wait a second, every single month, it's the same input file and then the same operation and the same output file. And as you know, like Python CSV processing is incredibly fast. So you feed it this thing and in like 10 seconds out comes your output and that's it. Like you're done. And, it was just this like moment of, oh my God, like what have we started here? So that's like a very kind of specific example, but I went into some detail to help people see that this is not something that you need to like, go to school for, or this is not something that needs a lot of like technical background. It's literally like you're talking to something and it's writing code for you, which great.
Just as one of the reasons I'm laughing so hard, aside from like, that's just cool and sounds super fun, is you get to be probably encouraged to find opportunities where this could exist. In some of our interviews at Puzzle, when we were talking to companies, there was a company that threw online events during the pandemic, and they would get millions of customers in like a day or two along the way. And I remember interviewing their accountant, and it took 4 people 4 days to split up the file into a bunch of little subfiles to be able to then do all the consolidation, the validation, then add up all of these summaries into create the like main journal entry. It said it would take 4 people like 4 days to get it all done.
I mean, I believe it.
Yeah, here being able to be handled by ChatGPT in like seconds once you obviously get it up and running is like just insane. Are there places, given I'm guessing you've tested it in a lot of other places, what do you think a future state could be when it comes to AI and accounting?
What I'm most excited about is I think right now, a lot of things we do at computers, you're kind of wrangling some language or wrangling some syntax in Excel or SQL or something. I think AI hopefully will just make that much more like fluid, and hopefully my ideal state is it's almost invisible. Like you're not like 2 people could be talking and we could be talking about a computation and this like model will be able to like grab that context and then actually run that analysis for you. If that's the future we're looking at, then I think the skills we're focusing on as accountants is not so much like, oh, I know this like, fancy random syntax that like helps me get stuff done. I think that becomes less important over time. And you then start to see that, well, maybe what's most important is really understanding how the business world works. You might still need humans to negotiate with each other because granted, people are using ChatGPT to negotiate out of like random fights and stuff and it's successful. So maybe, but I think the fun parts of, working at a startup or like building a business is the things we do with other people. And maybe everything just gets accelerated because you talk about a feature you want to build, you go and like think it or ask it in like 5 sentences and out comes like a mostly built feature. The models today aren't quite there yet and it still needs a little bit of wrangling in my opinion, but I'm really like optimistic on what this does in the next like couple of years even.
I think the part that I get really excited about listening to you is the ability to translate. Sort of GPT is a translation layer in that I like, what the problem is you're trying to solve. And a prerequisite might have had to be, you have to know how to code Python in order to solve this problem, which invariably removes some power from your ability to do your job effectively without an engineering team sitting there or having to go learn Python, which is not very many people can just read a book and then tomorrow code Python in the right way or have the permissions. So the ability to be able to describe your problem in your own words and be able to have that be interpreted and then a solution generated, I think becomes really important. And this becomes even more important at scale, like you talked about, because as you get big, it just requires a lot more people if a lot of the systems need to be manual or you need to be an engineer. And as you said, usually in almost every software company, the shortage is resources and engineering resources is the most shortage of all that. So as we transition and think about that within the realm of OpenAI, reports have been that OpenAI is one of the fastest revenue generating companies of all time. And while I know you can't comment on numbers, you are still the controller and you have to manage accounting. And when there is a pace of growth, that is just, things are breaking. By the time something works, sometimes it's already broken along the way. So let's just kind of dive into a little bit, like how big is the accounting team at OpenAI?
I'd say core accounting, which includes like payroll and, finance data, and I'll come back to why, like that's around 25 people. If you add like tax and procurement and AP and folks, that's 30, 35 people today.
Wow. Hey, we'll get back to the conversation in a moment after a word from our sponsors.
If you don't already subscribe to Turpentine's industry-leading newsletters, like our new daily AI newsletter, Emergent Behavior, or Media Empires, you should. But that's not what I'm here to tell you about. The platform we use to power these newsletters is called Beehiiv, and it's excellent. First of all, it was started by the same early team who helped build Morning Brew into a $75 million newsletter business. And they built Beehiiv to offer that same powerful functionality to anyone sending emails. From essayists to business owners, the platform is beautiful, their text editor is intuitive, and they help you scale your audience with custom growth features. Beehiiv has powerful tools to help you monetize your content. You can easily launch paid subscriptions or pursue an advertising model. The Beehiiv platform will even connect you to premium brands to sponsor your newsletter. Not only do we use them, but thousands of the top newsletters in the world also use them, like Milk Road, Blockworks, the Lindy newsletter, and so many more. Beehiiv's founder hooked up Moment of Zen listeners with a sweet deal. Get 20% off for 3 months with code MOZ. Visit beehiiv.com, that's BEEHIIV.com, to get started. The tech world turns to the Brave browser for its unbeatable privacy protections. But did you know that Brave also has a private ad platform? Brave Ads offers first-party targeting, and it's been cookieless since day one, so you can relax while third-party tracking cookies disappear from the web. Today, millions of people turn to ad blockers to avoid being tracked and pestered online. But Brave's new ad model aligns incentives for users and advertisers. Users earn rewards for viewing ads, which they can save, spend, or pass along to their favorite creators. And advertisers score points for respecting user privacy, generating ROI without invasive tracking. So whether it's high-impact announcements on the new tab page or keyword-targeted ads in Brave Search offers diverse, private, future-proof ad formats for all your business goals. Join the future of advertising at brave.com/ads. Mention Turpentine to get 25% off your first campaign.
Actually, much smaller than I would have anticipated. I remember when I was interviewing Uber in some of the heydays of their accounting team, they had 75 engineers just supporting the accounting team, which I think was like 50 or 75 along the way. How long does it take to close the books today? I know you don't have to probably have a timeline, but just curious.
We were doing like 8-day hard close earlier this year, and this past month we've moved it to 6 days, and my target is to move Q2 by 5 days.
To 5 days close. Wow. And then, so in that, what's the state of how you think about technology and systems to support that shaving off from 8 to 7 to 6 to 5 days?
My biggest learning/hack, and this was very organic and it just worked out in a really beautiful way here. And I swear to God, I'm never doing it any other way in any future company. Having really good full stack data people embedded in the finance team. And these are not product engineers necessarily. The person we hired can build the plumbing, he's good at ETL tools, and then can also partner with the business to really understand what they're doing and then turn it into something that's a SQL dashboard or a query that can be easily tweaked. This is the only way we've been able to survive, basically. I had to say our revenue team, even before I joined, we had a revenue team in place that was very SQL savvy, which, we wouldn't have been able to survive if we didn't. But the people we hired since then, even if they didn't know SQL, they've used ChatGPT to be their personal SQL tutor. And it's really good at if you paste an existing query and just say, actually, can you change this to blah, 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 it can just do it for you. And then you play around with it a little bit and then you actually don't need to ask it anymore because you see what it's doing. What we've done is we've built plumbing both into NetSuite and out of NetSuite. And then we use Stripe for our payments. So Stripe has really good data pipelines. Revenue was kind of our biggest initial problem child. I mean, really good problem child, but like still for accounting, you need to figure out how you're going to deal with revenue. So now we have this like really nice end-to-end data pipeline flowing from Stripe into NetSuite. There's like a rules engine that we implemented in the middle. So like end users, auditors, people not, people don't need to know any tech to be able to audit and see the logs of what the rules are. And like we did that pretty consciously, but it's really beautiful. And we're turning this on for product by product. We implemented a couple last month. We'll do more this month. The goal is like revenue should be daily and real time. The stuff that I told you about somebody writing a Python script for Azure, like that now runs in the cloud in Databricks because we've figured out how to like have Microsoft drop their source files and how have Databricks like grab that and just run whatever script needs to be run there instead of in somebody's desktop. So to the extent we like can systematize and just like make desktop procedures go away, that's been kind of the mantra.
I want to dive a little bit more into the sort of, so you use Stripe. Stripe has a robust data pipeline. You have your own mechanism for recognizing revenue. And so you created your own rules engine to pull data from there, run your own rules engine across of it, and generate your journal entries?
So we were doing an in-house rules engine for the longest time. And the rules engine, I call it that, but it's like SQL queries that just grab the right data sets and summarize it in the way. We recently implemented a middleware that plugs into NetSuite. So this basically is like a front-end tool that's embedded into NetSuite. Think of it like a suite app that then an accountant can say, okay, like if it has product type this, or they can like define whatever rules they want. It's like a very intuitive and easy to do for accounting. So we've basically like built the plumbing up front with the ability for accountants to like put rules together and see the journal entry it generates.
That is incredible. And especially at the volume you guys are doing. There's probably no other choice but to do that, but it still is like quite impressive along the way. And I get it. Do you have a dedicated engineering team supporting you at OpenAI, or is it just as needed people come over?
We were on an as needed model. I think maybe a quarter ago, we went to the engineering team and advocated for like a finance engineering team. It's a pretty small team now, and they don't like spend all their time doing accounting support, but like, it's really nice to have like at least one or two people now that have the context. So when we need a tweak, it's easy. Honestly, it's a lot of what they do is like setting up for new launches and new products and whatnot. But it's pretty cross-functional. We have folks here that are their counterparts. So they work really, really closely together with the product and eng team.
One of the things that you talked about as part of your job was supporting your business. And so let's just say there gets to a state in the future, whether it's through automation or AI or a bunch of third-party tools like you've worked at, like you're talking about, to get to a place where more and more things can be automated. What do you think the future state of a controller's job is in, say, 5 or 10 years from now?
I think it turns a lot more from like, like I said, you forget about the doing and the number crunching. Accounting just as a profession has this bad rep that we're just like number crunching people. But and hopefully this will be the thing that finally changes that to being people that can come equipped with numbers, can know how to interpret them, but then are able to like, if you're doing an M&A deal, like they're able to sit in there and add value from a place of what is this going to do to our business, and not so much like, let me take this back and come back 3 days later type thing.
So if you were to think about that state, what advice do you have for somebody that is proficient in the number crunching part of it, knowing that over time, automation and AI is going to get to a place where a lot of things that take up a lot of time are going to be able to be automated in a confident way? How do you become you? Like, how did you start to become that business partner? You said your parents were accountants. You went to train in accounting. You stepped in. What is it that you're doing right that you can advise other people on how to get started if their job is a little bit more contained to the number crunching?
I think a good way to start is by starting to really understand the story of what happened. Most accounting teams do a flux analysis at month-end close, and a lot of fluxes I've seen tend to just say, well, I looked at the GL, these are the 5 vendors we spent on, and this is why it moved up. And like, fine, like, yeah, sure. like you can see that, but it doesn't really tell the story of why did we work with these people? What is this market? Imagine it's marketing. Like, what is marketing really thinking of? How does this play into their, like, longer term strategy? And like, what are the puts and takes? And I think accounting needs to kind of step out of their like little bubble and go into the business, sit down and grab lunch with people across the company and hear about what other people's priorities are. What are the challenges they're facing? And, how can we run like analyses? For example, like accounting has full visibility into the cost of like putting an event together. So you can now say like, let me help you think about the ROI of throwing these events. And like, should we do more of these? What are the things we can tweak? And I think you have access to this gold mine of data and like, you can see patterns that a lot of people in the company don't. And I think accounting can pretty easily be that bridge. You just have to like be motivated and, actually like do it.
Are there any lessons? So when you're a public company, obviously you close your books and every quarter there's an earnings call and you have to field a bunch of questions. Not the same requirements for a private company, obviously. So one of the things you talked about was speeding up the month-end close process, and that's great. There's no requirement, but it gets to good practice and good discipline. Are there any lessons for what you do after the month is closed to be a good business partner? Any best practices for reviewing this with leadership or reviewing the sort of books with your peers? Talked about doing the flex analysis. How do you run that post-close either education process with the team that we can maybe learn from how to be great at that?
Pretty much like as soon as we close, we prepare a few like high-level takeaway slides and review that with finance leadership. In terms of business partner engaging, like that's a really good time to go back to legal or marketing or what have you and sit down with them and say, look, this is where things landed. Let's do a quick BVA. It's just like trending. What did we budget for that hasn't landed yet? And I think it's a good touch point. I actually like to do a touch point before close as well, because it's like a shortcut to getting your accruals right, because they just know intuitively what to expect that you might not have like gotten a PO and like, all the right things in place for. But I think going back to engage with business partners at that time to be able to say, this is what I see. Does this make sense to you? That's usually a good like touch point. And that part, personally, I really like the non-close times for people to go invest in systems and process upgrades. Part of like my reason to push close to a short time is I think if you do a 15-day business day close, it eats up like it's like the 20th of the month with all the weekends, and then people take like, oh, okay, here's a breath, and then there comes the next close again. And I feel like it keeps you in this place of being in a rut where you're like, man, I have no time, no energy. And I think actually some way to get energy is to like just really like tighten your close process. And now you have a solid like 2 weeks to think through what things can I automate, what systems should we be thinking about. And I think having that space makes it's like you're now in a positive cycle as opposed to a negative cycle.
Oh, I really like that. I like that framing. So aside from me wanting to follow your career and invest in every company you've been at along the way, and I think VCs out there need to be tracking Soumya's career and thinking about what is the next company. But we think about sort of the future state. There is this next generation of accountants coming up, or maybe even considering advice right now, like going into college and thinking about their careers. There's probably quite a bit of fear and anxiety out there to the requirements of getting a CPA and then having to do training in a Big Four and then coming into the company and then hopefully picking the right company like you have a repeated history of doing. And then also a fear that AI could take the job away from accountants. I think that's a fear out there. I don't necessarily agree, but maybe you do. What advice do you have for them in choosing accounting and why it can be a rewarding career and what it is that you've loved about your career?
Honestly, accounting as a profession comes in such a variety of flavors. Like there are people who love just the technical accounting aspect of it. They've spent like their entire career consulting on these topics, and it's good because there's a little bit of gray area, and it's like you get to build a case, make it, and it's like a very different world. I learned very quickly that my calling was like, building systems that scale. And it's a weird calling maybe, but like that's just where I have a lot of passion, and it gives me a lot of energy to see a broken process and then see it like just be so beautiful. And, it's like, that's it for me. And I think one thing is that like pop culture does us no favors. Like most people portray accountants as these like really boring, like, I'm in a suit and a tie and like I do the same thing every day. And I think in reality, accounting is not like that at all. In terms of accountants of the future, like I would say, I think breadth is maybe more important than depth. In being able to, accounting teams might get a lot smaller than what we've been able to, but there might just be more businesses to go around because people are able to get so much done faster. So they don't need to like have this enormous, hurdle of raising a bunch of capital to even start your business. Like I think the small business of the future could be like much, much bigger than what we know now. So I think to the extent that accounting is, people say it's the language of the business, like you have this shared way to like think about how a business is doing. I don't think that's really going away. We just, like me included, I think we need to be quite flexible and like maintain a level of curiosity on what's happening around us beyond like, I think the days of I have my close checklist and that's the end of my job are probably like not gonna last.
And then final question, any advice for the remaining thousands of accountants through the Wall Street Journal and FT report? I think a half of the profession has left over the past couple of years. Any advice for the remaining accountants, controllers out there who hear about AI or ChatGPT and have a little bit of fear? What do you think is a good excuse to get started playing around with it?
I think this whole like fear about AI is like interesting to me. And I think it's because we think of this as some amorphous like black cloud that we know nothing about. And I think if you just break that down and you say, well, this is, you can sign up for ChatGPT Teams, which is like the secure, like it's a more lightweight commitment than ChatGPT Enterprise. And, the cost to do that is like pretty de minimis. But you give access to your team and you tell people, what are the things that eat up the most of your time that you would love to go away? And, just start talking to ChatGPT. What I've found is like top-down pushes on we need to be like a leader in AI adoption tend to not land very well because immediately people's reaction is to tell you, well, that sounds cool, but it doesn't work for my stuff because my stuff is like special and unique and, like no AI could automate that. And I think we've had a lot of success just like flipping that on its head and say, everyone, you guys have, full like, okay from me, green light from me to go use ChatGPT. No one's going to judge you if you wrote that memo with ChatGPT. Do what you need to. But like, let's focus on really just like amping up, accelerating ourselves. And I think people now have the freedom to go try things out. There's no pressure to like go say, hey, like I've now succeeded or not. But somehow like being able to play around with it has been really, really successful. So if you're at a company and you're short-staffed and, there's a lot to do and not enough time, a really easy hack for a controller could be just give them access to an AI tool and just tell the team to run with it. Like people know their workbooks better than like I could ever know it in my team even. And I think for me to design an AI automation doesn't make nearly any sense if compared to like them doing it themselves.
I love it. Great advice. Well, thank you so much for being so generous with your time and your advice and your insights. I really appreciate it.
Thank you for having me. Really enjoyed the conversation.
Thanks for tuning in to Turpentine Finance. Share it with your executive team, direct reports, friends, and family. And if you want to support the show, the best ways are to leave a review wherever you're listening and subscribe. Turpentine Finance is part of Turpentine, the podcast network behind Moment of Zen, Turpentine VC, Age of Miracles, and more. Shows for experts by experts in tech.